Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we are diving into a report that looks like a simple announcement, but might just be hiding more than it lets on. Before we get into the nitty-gritty, if you enjoyed getting these unfiltered corporate insights, make sure you are subscribed and don't forget to join our growing community on Discord linked in the description below, where we chat about these filings and more. So what's the big news from the Oncology Institute Incorporated today? Well, it seems like a pretty standard board appointment, but let's see if there is more to it. This report is dated the 2nd of January 2026, marking the earliest event it covers, which is quite neat. First, let's look at what the company is all about. The Oncology Institute Incorporated, or TOI Incorporated as it is known on the stock market, deals in common stock. The par value, which is a very small technical number, is set at $0.0001, meaning they could theoretically issue a ton of shares without changing their overall book value too much. They also have warrants. Think of these as special options that give the holder the right to buy shares of the company's stock at a set price, in this case $11.5 per S-share. These are listed under the ticker TOI and are exercisable for common stock. This is interesting because it tells us investors might be expecting the stock price to go up beyond $11.5, making these warrants valuable. Now onto the main event. The company announced the appointment of a new director, Mark D. Stolper, effective the 2nd of January 2026. This happened through something called a unanimous written consent, which basically means all the existing board members agreed to this appointment without needing a formal meeting. This is often used for speed and efficiency. Mr. Stolper's term as a director is set to end at the company's next annual shareholder meeting. It is expected that he'll be nominated again as part of the management's slate of nominees, suggesting Hez coming in with the full backing of the company's leadership. What is really key here is Mr. Stolper's role. He has been appointed to the Audit Committee and will serve as its chairman. Even more importantly, he has been designated as the Audit Committee's financial expert. This is a big deal. It means Hez expected to have a deep understanding of financial reporting and oversight, which is crucial for ensuring the company's financial health and transparency. This appointment signals a potential strengthening of the company's financial governance. The fact that he was chosen specifically for the Audit Committee and even designated as the financial expert tells us that the company wants to shore up its financial reporting and oversight. This suggests they might be anticipating closer scrutiny or perhaps want to proactively demonstrate strong financial management. As for compensation, Mr. Stolper will be part of the non-employee director compensation program. This means he will receive an annual salary of $75,000 paid out quarterly. On top of that, he will be granted restricted stock units or RSUs for his service as a director and as audit committee chairman. These RSU grants will be made at a later date. This compensation structure, mixing cash and stock, is pretty standard. It aligns the director's interests with those of the shareholders as they benefit when the stock price increases. This news was actually announced to the public on the 5th of January 2026 via a press release. This filing is essentially confirming and detailing that announcement. The full press release is attached as Exhibit 99.1 to this report. And of course we have the interactive data file, which is standard for SEC filings. Now let's look at the bigger picture here. The Oncology Institute Incorporated is essentially telling us they have brought in a seasoned financial professional to oversee their audit committee. Why might they do this? Well, it could be a proactive move to boost investor confidence. Especially in industries where financial accuracy and transparency are paramount, having a strong audit committee chairman can be a significant positive. This appointment comes with a clear financial commitment from the company, a salary plus stock awards, which is a standard way to attract and retain talent for board positions. It indicates that they value strong financial oversight and are willing to pay for it. Looking at the underlying securities, the common stock and the warrants, it suggests the company believes its stock price has potential for growth. The existence of warrants at a $11.5 exercise price implies a target or at least an expectation that the stock will trade above that level in the future. From a Warren Buffett perspective, we're not seeing deep financial tables in this specific filing, which is common for an 8K report. These are typically used for significant events that are not necessarily routine quarterly or annual financial disclosures. However, the appointment of a financial expert to the audit committee chairman role is a qualitative indicator. It suggests a focus on good governance and financial integrity. This is like buying a well-managed business versus one where the books are, shall we say, less transparent. The key takeaway here is the emphasis on financial oversight. The Oncology Institute Incorporated is sending a signal that they are serious about their financial reporting and governance. This could be important for investors who prioritize stability and transparency. Are there any hidden risks? Well, without the detailed financial statements, it is hard to say. But the move itself is generally a positive sign. It is like a company hiring a top-notch accountant. It doesn't guarantee success, but it certainly makes you feel better about their financial house. So, what is my take on this? The appointment of Mark Day Stolper as Audit Committee Chairman is a solid move towards strengthening corporate governance. It signals a commitment to financial rigor, which is always a good sign for any company, especially one in the sensitive healthcare sector. The $75,000 annual compensation plus RSUS for a board role is within typical ranges, showing an alignment of interests. The main opportunity here is increased investor confidence and potentially better financial management. A notable risk, though not detailed in this filing, could be if the company's underlying business performance doesn't match this newfound emphasis on oversight. In conclusion, this filing is about leadership and governance. The Oncology Institute Incorporated is bolstering its financial oversight with a qualified expert. It is a positive step, but as always, investors should look for more detailed financial reports to get the full picture of the company's health. Alright, that is our breakdown of the Oncology Institute Incorporated's latest filing. What do you think about this board appointment and what it means for the company's future? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button. It really helps us out, and subscribe for more deep dives into corporate filings. And don't forget to join the conversation on our Discord channel linked in the description. Thanks for watching, and we'll see you in the next one.